Hi, I'm KT. So today it's a lesson on understanding how demand and supply will affect these prices. So welcome to today's lesson on the world of stock markets, where we explore a very fundamental concept. So how the demand and supply will affect stock prices. So whether you are a beginner or seasoned investors, understanding these dynamics can provide valuable insights into the market behavior. So these are my personal principles. So to start with the basics, the stock price of a company is largely determined by the forces of supply and demand. So let's take a look. So example, like Pfizer, $26.37 is the stock price. So just like any other market, if more people want to buy a stock than rather to sell it, the price tends to go up. So conversely, if more people wants to sell a stock than rather buying it, the price tends to go down. So just imagine you are at the farmer's market. So if everybody wants the fresh strawberries from one vendor and they only have a limited supply, so the price of strawberries will likely increase. So this is the same concept. So once we know this principle, so the next question is, what are the factors that will influence demand and supply? So I think there are quite a number of factors here at play. So let me just give some of my insights. One of the factors that influence demand and supply is definitely technical analysis. So let's say we use charts and historical price data to predict future price movement. So just take a look at let's say Robinhood here. Well, we might want to sell a stock because we look at the stochastic technical indicator. It is oversold. It's overbought here actually. So that's why people will want to sell Robinhood just by looking at this graph. So if there's a considerably large number of masses who believes in this and they start to sell the stock, then the price of a Robinhood goes down. So it's the same principle for any other technical analysis indicator, but you need to have a mass believer or mass following of this. Okay. Well, next, if you look at fundamental analysis, this is one that will result in people uh, wanting to buy or sell these stocks. So let's take a look at Robinhood. If you look at fundamental analysis, some people believe in the company's financial health. So they look at the profit margin, it's positive, it's making money. So it's positive value, 21.55%. So a lot of people buys into this that Robinhood is making money. So they will buy a lot of Robinhood shares. Well, on the contrary, if the profit margin is negative, so people look at this, they might want to sell this stock. So it's the same. There's so many fundamental analysis indicators here, or you would say the ratios like P ratios, the forward P ratios, your EPS, your ROI, your ROA, etc. So even like your quick ratio, current ratio. So um, this means that uh, is evaluating the company's financial health. Mentioned before, like dividends, earnings, and the growth uh, potential. So this is just one uh, one way for financial fundamental analysis. The next factor probably it's psychological factors that will affect investor decisions. So one example is social media. It can significantly impact stock prices. So let's say for we look at Tesla because uh, Tesla TSLA here. So you talk on Tesla, if Elon Musk tweets positively about Tesla's financial health frequently, it might boost the investor confidence and drive up the demand for the Tesla stocks. So even if the company's situation hasn't changed substantially, so this shows how influential voices can sway the market sentiment. So the fourth factor that I think will also affect demand and supply is the event-driven analysis. So, example, investors would react to specific events such as mergers, acquisitions, or even new product launches. So, just one example, imagine if, not say imagine, like Donald Trump is set to assume the presidency next week, and he has expressed strong support for cryptocurrencies. So, as a result, companies related to cryptocurrency might see a surge in their stock prices as investors anticipate favorable regulatory changes or increased adoption in this sector. So, one such company that might be affected when Donald Trump assumes presidency next week is Robinhood. So, this is a platform that deals with buying and selling of cryptocurrencies, stocks, etc. Next, I think one of the remaining factors is like the volatility analysis. So, like the VIX volatility index. So, why is this so? Because considering the degree of variation in trading prices over a period, um, and how it tends to revert to a mean. So, if you take a look at the graph here, so you can see that the mean of the VIX it's about 11 to 15. So once you see that volatility spikes up to 64, you will know that in the long run it will go towards the mean, which is around 11 to 15. So this is an opportunity for people to buy a put on VIX. Okay, so this is an example of volatility factors that will affect the demand and supply of it. So it's the same as in for stocks. So stocks with high volatility often experience large price swings, which are also opportunities. So if a stock is trading well above the historical average, traders may anticipate a pullback and prompting them to short the stock. And conversely, if a stock is trading below its historical norm, they might leverage this volatility by buying, expecting the price to revert to its mean over time. So, up to now, if we look at the bigger picture, right, we can say that stock prices are ultimately a reflection of a vast number of individual and institutional intentions. So each trade place represents a decision influenced by many factors, many insights, and also different strategies. So collectively, these decisions create the market dynamics that drive the stock prices in the short and long term. So just remember, like in the stock market, if the price rise or fall, and if we decide to 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 analyze these factors and to make a move, it is still to the saying that Mr. Market is unpredictable or not rational. There are always risks involved, and no such analysis can guarantee the results. Okay, but however, just to explain this principle of demand and supply, and the conclusion is, well, just understanding how demand and supply affect these prices is very basic, and it's crucial for making any informed trading decisions. So, regardless of all the different factors we have discussed, it's essential to assimilate all of this information and make a judgment to execute the trade. So, um, the takeaway is to look at all the different information or different perspective or strategies you have on hand, and then execute the trade. Don't fall into the trap of just information overkill and just watching from the sidelines. So to participate is actually the key to harness the opportunities here. So I think it's based on uh, experience, and also based on your own judgment and your evaluation, to develop your own method of strategies to make the trade. So that's all for now. Thank you for listening to today's lesson. So if you find this video helpful, please like and subscribe and hit the notification bell for more insights. Let me know in the comments if there's a specific topic you'd like me to cover next. Yeah. So that's all. Have a nice day, everyone. Yeah. So just keep learning, stay curious, and happy investing.